So as a first-time home buyer, you may be thinking, okay, I do want to buy a home. I know I'll need a mortgage, but how do I actually get qualified, or how does a bank qualify me? So I'm here with Rick Walden of Guaranteed Rate Affinity. And Rick, can you just kind of explain how you qualify someone for a mortgage? Because pre-approvals
Sure,
are really important.
sure. Yeah, we qualify off of a 43% debt to income ratio.
Okay.
Okay, so I'll just use a nice round number. If you're working with a client makes 120,000, that's 10,000 a month.
Okay.
Take that figure, you times it by 43%. Okay, so that's $4,300. What does that number signifies? That number signifies the total monthly debt that the lender will allow them to carry,
Okay.
which would include the new mortgage payment, which consists of principal, interest, taxes, insurance, HOA, if it's a condominium, plus all their other monthly recurring expenses.
Okay.
So for this example, let's assume we have a client that has no debt. Okay, so that 4,300 can all be housing. Okay, so if we subtract out $1,000 for taxes and insurance and potentially an HOA, that's a $3,300 mortgage payment, principal and interest, and that would equate, based on current interest rates, of about a $525,000 mortgage. So someone with no debt who's making $120,000 a year could qualify for a mortgage of roughly $525,000.
So okay, so now that we kind of covered a lot of the very fundamental basics of that debt to income ratio that you're talking about. Sometimes when I'm working with buyers, they say, hey, great, we got a pre-approval, but we have all these other monthly expenses. So I'm just wondering, at what point would you like to hear from a buyer, or what would be helpful for you to know in writing up a pre-approval letter? Like, are there any utility costs? Are there any daycare expenses? Or I don't know if student loans are factored into that. So what's kind of some of the other stuff that people would kind of just tell you
Yeah,
about?
the debt services that I was referring to that go into that ratio are any consumer debt that's going to show up on the credit report. So a student
Oh,
loan will,
okay.
an auto lease or an auto loan will,
Okay.
credit cards will, personal loans will. But your point is well taken, because there are other expenses. So taking that same client,
Mm-hmm.
that $4,300 payment,
Yeah.
although they have no other debt, on the credit report, there might be other expenses that we just don't see.
Okay.
To your point, child care.
Mm-hmm.
Perhaps they like to vacation many times, several times.
Groceries.
So I always have that conversation and try
Okay.
to find out, based on their own personal budget, what are they comfortable spending per
Okay.
month. It's one thing for the bank to qualify at X, but
Mm-hmm.
we really need to know from consumer what their comfort level is.
Okay. So the process of doing essentially a pre-approval, a lot of paperwork involved. Like you mentioned, you do, credit reports, income, proof of income, tax returns. Really what they should be doing is submitting like a very, even just high level approach, saying like, hey, by the way, in addition to this debt, I have to maybe help fund my in-laws assisted living. There's a
Sure,
price there, things
absolutely.
that you
Yeah.
don't know. So I would think adding all those other expenses will help provide probably a more solid picture of what that monthly number is for their payment.
Yeah, I think it's prudent for any client to do a kind of a residual income type of
Okay.
calculation. Make sure their budget is one that's comfortable. Maybe some of these expenses are not long term,
Yeah.
and they can take those into account. Obviously, incomes are going to rise, so you're going to be able to, grow into a mortgage payment potentially.
Okay.
So there's a lot of considerations. That is obviously a conversation that I have with every client.
Okay. Because ideally what I'd like them to do, or what I think would be helpful, is just, send you a spreadsheet or just an email bullet items of stuff to look into, or whatever you think would be helpful. But again, just the goal is to get something a little more concrete so that you know what the debt is, but how about your expenses? Kind of
Absolutely.
thing. All right, well, thanks, Rick. Anything else you want to include?
I think we touched on everything.
Everything. That's great. Okay.
Not everything, but
Sure. So that's it for now then. If you have any comments, please go ahead and put them in the comments section below and we'll get back to you. Please like this video and share it with your family and friends. Take care. Have a great day.